So I think we're just going to go ahead and get started. We are going to have this recorded for everyone that might not be able to join us live today. My name is Larissa, and I'm the VP of Education for the Greater St. Louis MGMA. And thanks for joining us today for our webinar. We're very excited to have Gregg Lemley here from Ogletree Deakins, and he's going to be talking about wage and hour, everything you need to know. Thank you, top 10 wage and hour top 10 mistakes. I'm sure we're all going to learn a lot, but a little bit more about him. He's been practicing exclusively in the area of labor and employment law and related litigation since 1995. He concentrates his practice primarily in litigation of employment and employment-related commercial disputes and employer counseling. As well, he founded the St. Louis office of Ogletree Deakins in 2007. He's been designated as a 2009 to present Missouri super lawyer based on peer surveys by Law and Politics, recognizing him as among the top 5% of attorneys in Missouri. And he's also been listed in Best Lawyer since 2013 and is a 2017 and 2018 BTI Client Service MVP. So we are really thankful that you've taken time out of your busy schedule to be here with us to share this great information. What we're going to do is I'm going to be monitoring the chat, and after Gregg talks about each one of the 10 topics, we are going to take a minute for questions just to see if there's anything relevant, and then we're going to move on, and then we'll have a period of questions at the end. So with that, I will hand it over to you, Gregg.
Thank you, Larissa, and thanks everyone for being here today. Great to have the opportunity to talk to you. You know, this is one of those topics that can be a bit mundane at first glance, but it really is an important one for all employers to be thinking hard about, because of all the different types of employment law that I deal with, this is the one that results in the costliest litigation. And that's primarily because these claims are almost always brought as class actions. And so all you need is one disgruntled employee to go to the wrong lawyer, and next thing you know, you have a class action wage and hour claim. And the other reason is that every single employer gets some of this stuff wrong. So no matter how hard you're trying, I will be really shocked if every single person in the audience, by the time we get to the end of this, doesn't realize at least one thing where they're making an error or have some potential exposure. So our goal today is going to be to make sure you understand what those are, so that, and also give you some sort of helpful, practical suggestions on how to fix any problems that you might have. These issues are actually even heightened right now in this current COVID work from home environment that we are all living through. And we'll talk about why in a little bit, but there are some definite wage and hour issues that arise from your employee population that might be working from home, which I suspect in a lot of cases is many of them. So yeah, as Larissa said, when we get to at the end of each number, I will pause, and if there are any questions in the chat, I'll try to answer those before we move on to the next topic, and if not, we'll just keep on plugging through. So our first topic, our number 10 on the list, is failing to prevent or to pay for unauthorized overtime work. And this one, combined with our number 9, which is off the clock work, is really the place where almost everybody has the most exposure. And so we're going to talk in a little bit of detail about why that is. But the basic tenet is you have to pay your employees, your non-exempt employees, for every bit of time that they work, regardless of whether you asked them to work that time and regardless of whether you even told them not to work that time. If they work it, you've got to pay for it. And some of the areas of exposure come from work from home, a little bit of work done on the weekend on somebody's phone that we didn't know about or we didn't think about, and then sort of the fringes around the start and the end of the workday. But it also comes up in the context of employees who we might have classified as exempt, who are maybe not in fact exempt under the law. So just a brief review. Of course, covered non-exempt employees must receive 1.5 times their regular rate of pay for all hours they work over 40 in a work week. So basically anybody who's not exempt under one of the recognized categories under both federal and state law, if they work any time in excess of 40 during a standard work week, which is defined, then you've got to pay them time and a half for that work, even if you told them not to work overtime or not to work beyond their schedule without specific permission. The work week, as hopefully all of you know and have designated, is determined by you, but it is a set of 7 consecutive 24-hour periods, or 168 hours. And once you define it, that work week is set. So it doesn't vary from week to week. So it might start, Sunday at midnight and go through Saturday at 11:59. But whatever it is, that's your standard work week, and that's going to be the period that you use for determining whether someone has worked overtime in a particular work week. The next important concept is the regular rate of pay. So typically with an hourly employee, their hourly rate is the regular rate of pay. And so if they work 40 hours at $10 an hour, that 41st hour is going to be at $15 an hour. But it can get complicated when you have, for example, salaried non-exempt employees or employees who you haven't been paying overtime. But essentially, the regular rate is determined by dividing the total earnings in the work week by the total number of hours worked in the work week. And that's going to be the applicable regular rate on which you pay time and a half. And of course, that can't be less than the applicable minimum wage. So if you have a salaried non-exempt employee, for example, who works 60 hours a week, that salary has to equate to at least the minimum wage when you divide it by 60, not by 40. All right. So let's talk about some of the traps that we fall into. First of all, the standard is whether we knew or should have known that an employee was performing work. And some of the ways that that can come up, for example, let's say an employee shows up before they clock in or before their standard shift, depending on how you calculate your time, and somebody sees them there at work, particularly someone in a management role, and knows, either because they saw them there or they saw the evidence of their work, that they worked longer than their standard shift. Once that's the case, we know or should have known that they worked more hours than their regular schedule. And if that means they worked more than 40 in a week, then we are on the hook, even if that employee does not put down or record that time, to pay them for those extra hours. And if they're over 40, to pay them at the time and a half rate. Next one is directing work that could only be accomplished by working off the clock. So for example, we can't tell employees, hey, you're on a 40-hour schedule, no overtime, can't work any overtime. And by the way, here's a ton of work that no human being could possibly accomplish in 48 hours, and we're just going to close our eyes and hope that it magically gets done and pretend that you didn't work more than 40 hours in a week. Can't do that. And so that's often how employees try to prove if there is no recorded time or how to bolster their claim that they worked more than 40 hours in a week, even though they recorded less than that. Is to say, here's the work that we were doing and it could not have been accomplished in the time period given. Also, observing more work being accomplished than could be expected while on the clock. For example, if an employee is doing work at home in the evening and you're aware of the fact that that's happening. And that's one of the things that I want to talk about in terms of the COVID environment, right? So if we have employees that are working from home, that poses a number of things that we need to be cognizant of. First of all, if they're hourly employees and they're on a schedule, but they have a phone or a computer at home that they're working from, and we see that they send an email or make a call or send a text that's work-related, that's outside their scheduled shift, then we are on notice that that employee has performed work outside their regular work hours. And even if they don't write it down, we've got to make sure that it's getting paid for. Now, luckily for us, the Department of Labor just last week issued some guidance on the issue of whether it's our obligation to go through and audit login times, keystrokes, things like that we might have the opportunity to view. And the DOL said, no, we don't have to go that far. We don't have to, because, I could see an employee saying easily, hey, you knew I was working more than 40 hours because I was logged in and actively working, and you could have checked my computer records. DOL says we don't have to actively audit that on a continuing basis. But if that manifests itself in something that makes it obvious to us that they've worked beyond that amount of time because they've sent emails, they've made calls, or something has been accomplished in the evening after the workday, now we're on notice, and now we need to make sure that they get paid in that context. All right, so first solution to this one. First of all, let's make it clear that management approval is required to work overtime. We want to do everything we can to prevent employees from working overtime and make sure that they are told and they sign off on a policy that tells us, hey, I know I'm working home and things are a little bit flexible, but I can't work more than 40 hours without permission. We want to tell them very explicitly that they cannot work off the clock, and even more clearly that no one can tell them that they should work off the clock. No manager can tell them, because we hear this all the time from employees. Well, yeah, I only put down 40, but my manager told me I needed to work, but only put down 40. So we want to have something in writing, very clearly signed off on by them, that they understand that they can't be told that, and that if they are, here's the number they can call to report that, and that they must call and report that. Obviously, we want to make clear to them that they can never punch in or out for another employee, and make clear that we can and will discipline violators who do work overtime when they're told not to work overtime. And I will make a very careful distinction there, because if someone is told not to work overtime and they do it anyway, we can discipline them for doing that, but we still have to pay them for the time that they worked. So the other thing that I would suggest, and I think this is really good, and I know people do a lot of different ways of monitoring time, and in this COVID environment that can even change. Some people clock in and clock out, and that's great, but some people ask their employees to record either just the amount of time they worked or the actual hours they worked. Either way, I strongly recommend that at the end of every work week, the employee has to sign off on a recording of their time that says very clearly, number one, this accurately represents all of the time that I worked this week. Number two, I did not work any time that I'm not recording. Number three, I understand that I cannot work time without recording it, and that if someone asks me to do so, here's the number I would call. If you make them sign off on that every week as they turn in their time, and you don't have active knowledge of them working off the clock, then that's going to go a long way towards helping you defend against any claim that an employee might try to make. All right, and I'll pause right now for questions. Larissa, anything in the chat?
Doesn't seem so.
All right,
so
then we will trudge along.
Go ahead.
Yeah, thank you. All right, so this is a very related topic, and a lot of what we've just been talking about applies. And this is the off-the-clock work issue, and that is including non-recorded, extra office, plant and or at-home work. So it's the same issue here, really, but just some additional cautions here. You know, as I talked about earlier, you are required to pay employees for time, as the statute describes, that they are suffered or permitted to work, which means whether or not we tell them to work it, if they work it, we have to pay them for it. So some examples of ways in which this comes up, activities where it's necessary to quote unquote perform work where people sometimes don't pay. Donning and doffing of protective equipment. This is a big one that comes up in litigation. So sometimes employees might be required to put on particular protective equipment before the workday begins. And if that's more than de minimis, then, and it's not something they're doing at home as they're putting their clothes on, then we are required to pay them for that time. So they should be clocking in before they don and doff that protective equipment, and clocking out after they take it off. Now, this is, I can anticipate the question, simply putting on a mask like we all do every day now is not going to be sufficient. That's going to be definitely de minimis, and you're not going to have to pay for that. Although there is significant and disparate case law and interpretations coming up on the issue of whether or not you have to pay somebody for the time they spend taking their temperature. And the general rule right now seems to be if they take their temperature at home, that's not probably compensable, but if they have to come into work and line up to take their temperature and have that recorded, answer some questions, and that probably is compensable time that you want to make sure you're paying them for. So some other example, probably not in your industry unless it's a scalpel, but sharpening knives, setting up the machine before clocking in. So you don't want someone to have to come in and sort of set up the equipment they're going to use to do their day before they clock in. Same thing with booting up their computer. We've had many, many class action claims about the 3 or 4 minutes that it takes to boot up a computer. And if they're booting up the computer and then their login is actually on their computer, that time is compensable and is subject to potential class action claims if they're not compensated for it. So you want to have a mechanism for taking care of that. And same thing with clocking out before they shut down their computer system. Some technology traps. As we talked about earlier, answering emails via a mobile device or a computer while at home, that is compensable time. Even if it's just one email, we now have something that we've got to think about and consider what they need to be paid for that time. And just while we're on the topic, that comes up also in the context of furloughed exempt employees. So you'll remember that an exempt employee has to be paid their full salary for any work week in which they perform any work. So if you've got somebody on furlough, you want to make very sure that you're cutting off their access to devices and systems, taking away devices where you can, and making very, very clear to them on something they sign off on that they're not to perform any work while they're off, because you could end up on the hook for an entire work week of work over an email or two. Similarly, if an employee is driving to and from work and they're answering calls or hopefully not texting or whatever, we want to make sure that we're capturing that and compensating for that time, and that's going to be important. One other issue I want to raise that comes up from people working from home. So one of the things people are forgetting to take into consideration, if somebody is now a home worker, that is now their office. And so if during a particular day they perform any work at all from home and then they need to go into the office, maybe they only perform a half hour of work in the morning and then they drive to the office and work the rest of their day there. That drive is now probably compensable time because it's part of their continuous workday, since they now have essentially two offices, their home office and their work office. And if they're driving to and from after the workday has started. So it's different if they don't do any work and they just drive in and start to work. But if they're working at home, then they drive in, that's going to be compensable time. Again, work done at home, of course, is compensable, and work done on the way home, such as stopping by the post office to drop off company mail, that is going to be compensable time. And again, commuting to and from work just straight up is not work time, but commuting from job site to job site, including now a home job site, is going to be work time if it's in the middle of the work day. On-call time is another issue that we need to be thinking about. And whenever we have employees that are on call, we need to be analyzing whether they are engaged to wait or waiting to be engaged. And if they're engaged to wait, that's all compensable time. If they're waiting to be engaged, it's not compensable except for the parts of time when they actually are then engaged to answer or respond to a call or whatever that might be. So the ultimate question is whether the employee can effectively use the on-call time for their own purposes. You can have some restrictions without it becoming compensable time. It becomes hours worked, the entire on-call time, when an employee either has to stay on the employee's premises, whether if the employee has to stay so close because, for example, hey, you have to report in within 5 to 10 minutes and be there, then that's really time they can't effectively use for their own purposes. A half-hour reporting time is fine. But if either of these are present, then it's probably payable on-call time. It's not hours worked just because they have to carry a cell phone or other device with them. It's not on-call time just because they're required to leave word at home or with the employer where they can be reached. So we want to review the routines of all of our workers, particularly those whose routines have changed in light of this new environment, and make sure we're taking into consideration all of these potentially compensable time issues. Train all of our managers' employees about these expectations so everyone knows. And if we don't want people working in some of these fringe areas we've been talking about in this COVID environment, then we need to make sure their managers know that and that it's clearly communicated to them and that we're enforcing the rules we create in this respect. But remember, the overarching point is get as much information as you can, because there is no ostrich defense to this. If you knew or should have known about it, then you're going to be on the hook. So it looked like we had a lot of text in the chat, so I'm going to pause and let Larissa tee those up.
Yeah, absolutely. So we had a few questions and then some comments and everything. The first question is from Chris. So for salaried employees, can we just work them to death and not worry about how many hours or what hours they are working at home?
So I will say yes, with the caveat that you use the word salaried, and I'm going to use you as an example to say that only if they're actually exempt, because obviously just because someone's salaried does not mean they're exempt. But if this is an exempt employee, then, by nature, an exempt employee is paid a salary for all of their hours in the week, regardless of those, and they're not entitled to additional time. Now, whether or not you want to work them to death might also depend on whether you want to keep them as an employee, and it's an employee relations issue for sure if you're working someone too hard for too long. But yeah, in terms of payment issues, if it's a truly exempt employee paid on a true salary basis, then you do not have to pay them extra for additional hours.
Okay. And then the next question was from Pat. What about exempt employees on vacation and responding to emails or doing some work?
Great question. So if the exempt employee is out on PTO and they're already being paid, then you don't have an issue, right? The only thing is to make sure that they're being paid for that week. So if they're out on PTO, but they happen to be working and they're an exempt employee, so be it. That's part of the job and part of life. So it would be a different issue if an employee was out on an unpaid leave of some kind, because then they are required to be paid for the work week if they perform any work, but not if they're on vacation or PTO where they are already being compensated.
Okay. And I actually have a question. Can you kind of just go over the difference between exempt and non-exempt?
That's coming up later on. We're going to talk about that in some detail on a later section. Yep. But thank you.
Perfect. And that's all the questions we have for now. So go ahead.
All right. Fantastic. All right. So number 8 here is failing to monitor and maintain accurate timekeeping records. And that is a specific section of the Fair Labor Standards Act. So not only do we have to pay people accurately, we are required to maintain accurate timekeeping records. And not only are we required by statute to do it, it's a pretty darn good idea, because when someone sues you and says they've not been paid for all their time worked, or they've been working overtime and not being paid for it, the better records you have kept and the better able you are to sort of actually prove whether they did or didn't do that, the better off you're going to be. And so I talked earlier about how we don't have to actively monitor keystrokes and login time. But when it comes to defending an off-the-clock claim, having those records and being able to go back and say, you said you were working more than 40 hours a week, but your job cannot be performed without you being logged into our system, and you weren't logged into our system more than 40 hours, that can be a very useful defense. Obviously, someone can be logged in without working, so it doesn't necessarily prove the negative, but if you can prove that they weren't logged in and they're required to be logged into work, that can be a useful thing. But we are required to keep records, an accurate record of the hours worked each day and the total hours each week, both under the law and in order to avoid a compliance problem. And the FLSA requires that all employers subject to any provision of the Act make, keep, and preserve those records. And it's the employer's burden. So if either the Department of Labor or an employee and their lawyer bring a lawsuit, so if we have an audit or a lawsuit, it is our burden, not the employee's, to establish compliance with wage and hour laws, both the record keeping and accurate pay for the time worked. So, and if we do not have records supporting that, it will absolutely be assumed, and you will have a heck of a time overcoming it, that you have not complied with the Fair Labor Standards Act, which can be a significant financial burden. There's no particular form you're required to keep records in. You don't have to have a time clock for non-exempt employees, but you are better off the more carefully you keep records, so that you can prove as best you can when an employee worked, and more importantly, when they did not work. Every covered employer must keep certain records for every non-exempt worker in this regard. The other thing I would tell you, though, is sometimes we wish we would have kept some kind of time records or some evidence related to the hours worked by people we treated as exempt in the event that it is later determined that they were improperly classified as exempt. What I would say is the first thing you want to do is make sure you're auditing your exempt positions to make sure they are accurately being classified as exempt. And if you do that, then you're going to be fine. But if there are any where you're kind of close to the line, but you're going to keep them exempt anyway, I would do whatever you can to sort of maintain whatever evidence you can that they're not working in excess of 40 hours a week, if that's possible. And by the way, I have a list here that I can send to anybody who would like it of the actual records that you have to maintain, but it includes things like name, social security number, address with zip code, birth date, gender, occupation, time of day and week, when the work week begins, hours worked each day, total hours each work week, et cetera, et cetera. It goes on. There's a list of 14 categories. All right, proper time records. Here's what we must maintain in this regard. I guess this is sort of part of that list, right? Full name, social security number, all the things that I just listed. And then it goes on to the basis on which the employee's wages are paid. In other words, this employee paid $9 an hour, $440 a week, paid piecework, paid salary, whatever that basis is, has to be recorded. What is their regular hourly pay rate? What is their total daily or weekly straight time earnings? And then their total earnings, overtime earnings for the work week. All of that is required under the Fair Labor Standards Act to be maintained. All additions to or deductions from the employee's wages, have to keep a record of that. Total wages paid each pay period and the date of payment and the pay period covered by the payment. So though that is your list of what the FLSA requires you to maintain for each pay period for each employee. You're also required to have a posting explaining the Fair Labor Standards Act as prescribed by the Wage and Hour Division, and you can get that poster online on the DOL site or other locations. And it has to be in a quote-unquote conspicuous place, but it's available at no cost from the U.S. Department of Labor. All right, so what's our solution here? Keep impeccable records, maintain accurate timekeeping records. Even if things are the policy or the standard practice, make sure they are documented and supported by time records in each employee's instance. And even better, as I discussed earlier, have your employees sign off on their timesheets every pay period under a paragraph that says those things that I referenced about the accuracy of the pay and the ability to report any requested off-the-clock work. And then back up all of your electronic records and make sure you keep all of these records and anything that you want to use to prove the lack of a violation for a minimum of 3 years, although we recommend 6 years in terms of how long you keep this, because there are state laws with longer statutes of limitations, and you have the issue, if a class action is brought, the plaintiff might have a 3-year look back, but there might be others in the class that can go back farther. All right, questions on Section 8 before we move on to number 7?
No questions at this time. Go ahead.
All right, fantastic. So the next one is impermissible rounding. This is a common problem. So the rules on rounding under the Fair Labor Standards Act are that it's permissible for us to round time to the nearest quarter hour. But I'm going to recommend that in this day and age where we have the ability to more accurately record time to the minute, that if you have that capacity, you do that. And if not, that maybe you round it to the 10th of an hour instead of a quarter hour. And that's because of this second bullet, which says that rounding must not be one-sided. And what that means is, if you look at if an employee brings a claim and you look at the bulk of their clock-ins and clock-outs and how those were rounded, if on balance, the rounding results in them losing money for time worked more often than it results in them gaining money for time worked, you have a potential problem, particularly if that is not near the middle of the continuum. And what I'm going to tell you is almost always rounding works to the employer's advantage, not the employees, because let's say, usually your employees hopefully aren't clocking in late or clocking out early and leaving work early. What's more likely to happen is they're going to clock in and start working 5 minutes before their shift, and that's going to round down to the hour, and they're going to lose that 5 minutes time. And maybe they worked a few extra minutes at the end of the day, and that 5 minutes gets rounded back to the regular shift time. If that happens on a regular recurring basis, that 5 minutes at the beginning and the end of the day, once it's multiplied out over the pay period, doubled as the FLSA does for your damages, multiplied across even 20 or 30 employees, and multiplied by 3 years, you're going to be talking about hundreds of thousands of dollars in damages over that. So we want to be careful about our rounding practices in that regard. So the rules, what you're allowed to do, though, obviously 553 can be rounded forward to 6, but 552 rounded back to 545. And if you have a units clock, then it's 88 to 100, 87 to 75. The idea being that the quarter hour is the largest unit of time that you can use for rounding. So our solution, clarify your rounding rules, train your employees, managers, and auditors, and if you are rounding, be transparent about it, but also I would say routinely audit to make sure that people are not being adversely impacted, and keep very clear records so that correct rounding can be verified, that you are in fact rounding down where you're supposed to round down and round up where you're supposed to be rounding up. Questions on section 7?
Claire, go ahead.
Okay. So next issue is failing to properly record and pay for lunch or break times and training periods. And this is a big one. So a lot of people have, let's say, a work day that is 8.5 hours with a standard automatically deducted 30-minute lunch break, and then they pay the employee for 8 hours, unless the employee actively reports that they have not worked that 30-minute lunch, or that they have worked during that 30-minute lunch period. So a few thoughts on that. My first one is going to be, don't do it. The best thing that you can do and should do is have employees actively clock out and back in for their lunch breaks, because class action after class action is brought by employees who say, yeah, they automatically deducted my lunch and I routinely didn't take my lunch, or I routinely performed some work during my lunch, and now it's up to us to try to prove a negative in that respect. So it is, the DOL frowns on it, and it is plaintiffs' lawyers love to bring cases over that. So I recommend strongly that people clock in and out for lunch. If you're not going to do that, you need to have a very robust policy that the employees are trained on and that they sign off on, that makes very clear that if they work any time during their lunch break, they are required to report the entire lunch break as paid, and that they sign off even more specifically over their pay each day that says, add another sentence to that pay sign off that says, I did not work any time during any of my deducted lunch breaks. But best policy is clock in and clock out. So general rule is that rest periods and breaks that are 20 minutes or less are considered working time. So if it's 20 minutes or less, they don't clock in or clock out. They don't get deducted pay. That's straight up paid time. Meal periods are not considered working time and need not be paid if they are 30 minutes or more in duration. And you see it says, but sometimes less, because there's this weird gap between 20 and 30 minutes that's kind of a gray area. What I would say is any break that is less than 25 minutes, you should be paying for. Here's the other important thing. The employee has to be relieved of all duties. They can't be required to sit at their desk in case the phone rings. If they answer an email or make a call during their lunch break, the entire lunch break is now paid, and we want to make sure we're being very cognizant of and careful about that. So that's kind of lunch. So trainings, meetings, lectures. The general rule is that training time, meeting time, attending lectures, etc., is work time unless, and the burden is on you to prove the unless, all of the following are present. The meeting or the lecture is held outside of the employee's regular work hours. Attendance is truly voluntary. The training is not directly related to the employee's current job, and the employee performs no productive work while attending. So let's break that down a little bit. Directly related means intended to improve performance in their current job versus merely an incidental benefit to the current job. So if the training or the lecture or the meeting that they're sent to is meant, it relates to or is intended to improve their performance in their current job, then it is working time automatically. If there's any threat of discipline or any kind of adverse consequence if they don't attend, then it's not voluntary and it's compensable time, regardless of whether it's directly related. So even things like open enrollment meetings, 401k plan meetings, we need to test them against these 4 prongs and make sure that they don't represent compensable time. And time spent traveling to training, if that training is compensable, is going to be compensable as well. So our solution here is educate our employees and our managers about expectations regarding breaks, meals, and training. Document your policies, preferably with a sign-off from your employees, and be very wary of automatic deductions for meals or breaks. You should ask employees to clock in and out. Questions on that section before we move on to number 5?
No questions. Go ahead.
All right, fantastic. Okay, so number 5 is paying for...
Wait.
Oh, sorry. Yep, please go ahead.
We just got one last minute before you started. This is another one from Chris. Optional meetings about benefits and after hours.
Yeah, so what we're going to always want to do is apply this standard right here. So if it's outside the regular hours, it is truly voluntary. In other words, if it is, hey, you don't have to come, but if you don't come, you're not going to know this very important information that you have to know, then I wouldn't say it's truly voluntary. If it's, related only to benefits and not the current job, and they perform no productive work while attending, then it certainly could end up being unpaid time. But the key one here, I think, for me is that in addition to being outside regular work hours, it really is truly voluntary in the sense that, hey, this is just some additional information if you happen to want to know it and learn more, but we really don't have to come. It's not crucial for what you need to know, and we've given you the information that you otherwise need. Do we have one more there, Larissa?
No, she said perfect.
Okay.
So that answered her question. Yeah.
All right, so paying comp time to a private non-government employee, this is an easy and short topic. The answer is you can't do it. So let's talk about what that means. The rule on comp time is this. You cannot, even within, let's say, a 2-week pay period, an employee who works 45 hours in 1 week and say, well, just work 35 hours the next week, and we won't pay you overtime for that 5, but you're going to get that 5 hours off as comp time. That is per se illegal under the Fair Labor Standards Act, unless you're a governmental entity. So the only time you can do what quote unquote comp time is within the actual work week. So if an employee works 40 hours Monday through Thursday and you want to give them Friday off, and that's part of the same work week under your rules, then that's okay, but you cannot do it outside of a single work week. So basically the solution is just eliminate any attempt to provide comp time or do it within that same work week. All right, number 4, since that one was relatively simple, I'm going to guess we don't have any questions yet, but if we have any, you can come back to those at the end of this section. So number 4 on the list is casual dealings and business relationships with independent contractors. This is an entire topic unto itself, but I want to touch on it just because if you have an employee or a worker who is misclassified as an independent contractor when they truly should be employees, one of the myriad of problems you're going to have from a legal standpoint is you're going to have a wage and hour issue because these employees are likely not being paid correctly under the Fair Labor Standards Act. So if you thought they were employed by someone else or self-employed and therefore an independent contractor, of course, many times they're very happy about that while they're working for you. They may even press for that and beg you to 1099 them and treat them as an independent contractor. All of that, of course, goes out the window as soon as you part ways with them. And next thing you know, you've got either a claim by them, a class action, or the Department of Labor or IRS knocking on your door saying, why did you misclassify this employee? And now you have tax issues, wage issues, workers' comp issues, unemployment issues, and benefits issues. So this is a big one where you do not want to go the wrong way and classify someone as an independent contractor when they are not. And you cannot determine whether they are or they aren't. That is set by law. Essentially, there's what's called the economic realities test, which is meant to determine the extent to which the work performed is, number one, an integral part of your business. If it is, then they're probably not an independent contractor. Whether they have the opportunity to experience a profit or loss based upon their own skills. If not, then they're probably not an independent contractor. And what investment in facilities and equipment is made by them versus you. If you're providing it all and they're providing none, then they may not be an independent contractor. The worker's skill and initiative. You should be hiring them for their own skill and not trying to control or direct how they do their job. And if you are needing to do that or wanting to do that, they're probably your employee. If it's a permanent relationship and not one where they're working with you for short periods of time and also free to work with others, they're probably your employee. And if you exercise any degree of control over how they perform the day-to-day aspects of their job or want to train them on how to do that, then they're probably your employee. So this is just another list of the same tasks. But the bottom line is you're going to want to very carefully analyze this before engaging in an independent contractor relationship with anyone because there are serious consequences. If you decide that you think someone truly is an independent contractor, you do then want to memorialize that fact in a written contract that very clearly sets out not only the fact that it's the intent of the parties that they be treated as an independent contractor, that they're going to be 1099, that they're not going to receive benefits, all of those things. But I would also clearly lay out in that contract some of the things about the relationship that support the notion that they really are an independent contractor, that you don't have the right to control the day-to-day aspects of how they do the work, that it is a short-term assignment. All of those things that were in those tests that we just looked at, we want to establish by contract that those are the nature of the relationship, and maybe even try to put an indemnification in there if they fail to abide by those conditions, although that might not be worth much if the employee does not have means. All right, questions about that before we move on to impermissible deductions?
I'm not seeing any, so I think you can go ahead.
All right, fantastic. All right, so issue number 3 is impermissible deductions from the pay of non-exempt employees. So first of all, deductions from pay. So this is about non-exempt employees. We'll talk about deductions from exempt employees in a moment. Deductions from pay are illegal if they are for an item that's considered primarily for the benefit or convenience of the employer, and the deduction reduces the employee's earnings below the minimum wage. But I want to pause and make sure that it's clear that there are laws in every state about pay deductions. So this is just whether they're legal under the Fair Labor Standards Act and might potentially cause a wage and hour violation. You also want to make sure you're checking your state laws wherever your employees are working to see what their laws are on deductions from wages, because many of them are pretty strict. But always be careful of any deduction that's going to bring someone below the minimum wage, whether it's for a uniform expense, deposit discrepancies, cash shortages if you're trying to recoup those, tools an employee has to buy. If they're paying for that and it causes their overall wage when divided out among their hours in any given work week to drop below minimum wage, then you've got an FLSA violation. So our solution is, if employees are purchasing their own uniforms, tools, name tags, et cetera, let's make sure that we're staying above minimum wage on that and that they really are not something that you should be purchasing. Determine if there are any disciplinary measures that fine non-exempt employees that might bring them below the minimum wage. Make sure our deductions don't reduce them below minimum wage. And sometimes what employees will do, if employees do have to cover the costs of some expenses, will pay an increased training wage to cover that so they don't drop below the minimum wage. So that's impermissible deductions for non-exempt employees. Now we're going to talk about deductions for exempt employees. And the rules here are a little bit more strict because, remember, an exempt employee, one of the requirements to meet the exemption is that an employee be paid the same salary every week regardless of the quantity of work performed, and you cannot make deductions from that set salary except in very specific enumerated circumstances that we're going to go over here. And they are 7. There's a list of 7 things that you can make deductions, and the consequence if you make a deduction that's not on this list is that you destroy the exemption for that employee at a minimum for that work week, but potentially beyond, and potentially for an entire class of employees. And of course, the consequence of that is that employee who's working more than 40 hours a week is now entitled to overtime at time and a half based upon their regular rate, which is dividing their salary by their hours worked. So we want to avoid that at all costs. So here are the permissible deductions. Absence from work for 1 or more full days for personal reasons other than sickness or disability. So this means your exempt employee is taking a full day off for something other than sickness or disability of their own volition, not something caused by you. So that wouldn't be a furlough or you sending them home. And it has to be in a full day increment. It cannot be less than that, or you cannot deduct the pay. Number 2, absence from work for 1 or more full days due to sickness or disability if deductions are made under a bona fide plan, policy, or practice of providing wage replacement benefits for these type of absences. And I will translate that into English for you. What that means is if you have a PTO or sick leave policy that provides for paid PTO, paid sick leave, whatever the case might be, and the employee has exhausted all of that and they're out again because they're sick or taking vacation or whatever, then you can deduct in full day increments for full days that they miss under that paradigm. Number 3, to offset any amounts received as payment for jury duty. So let's say an employee works part of the week and they spend 2 days in jury duty, and you still have to pay them for that week, but if they get their $12 a day, you could cut that out of what you have to pay them, so that's a small one. Penalties imposed in good faith for violating safety rules of major significance. So this relates strictly to safety rules. So if you have a policy that says if you engage in these safety rules, we're going to deduct a certain amount of pay from you, and it's a safety rule of major significance, then that is permissible. An unpaid disciplinary suspension of 1 or more full days imposed in good faith for violations of workplace conduct rules. So basically, you're performing, you've engaged in misconduct, you're performing poorly, we're going to suspend you for 1 or more full days, then we can deduct those suspended days for those violations from pay for the week. Proportionate part of their salary in their first and last week of employment, of course. So if an employee starts on a Thursday in the middle of the week, you don't have to pay them the full week. You can prorate that week. Same thing with the last week. And then finally, of course, leave that's taken under the Family Medical Leave Act. Leave under the FMLA is in fact deductible from the salary. So there is a safe harbor under the Fair Labor Standards Act that says you will not destroy the exemption for that employee if you make a mistaken deduction, if you have a clearly communicated policy that prohibits improper deductions and a complaint mechanism. So you're going to want to have a policy that says we will only make deductions under these 7 paradigms. We cannot and will not make deductions from your pay for other reasons. We've communicated that to them. We say if this happens to you, here's where you call the complaint. Number 2, we do then, in fact, reimburse an employee who reports or that we learn has had an improper deduction taken, and then we make a good faith commitment to comply in the future. So if all of that happens, then we will not destroy the exemption for that employee, but if we are missing any of those pieces, then we risk the exemption being gone and us having to pay overtime. So all 3 of those things are an exemption unless you willfully violate the policy by continuing to make improper deductions after receiving employee complaints. So all of these things only work if as soon as we find out about the problem from one employee, we make sure it doesn't happen again with other employees. If we do that, we're going to lose the safe harbor. So our solution here is to remember that a salaried employee is not necessarily an exempt employee. So again, talked about that a little bit earlier, but paying someone on a salaried basis is only one of a 3-part test for an exemption, and our last topic is going to be the exemptions themselves. So just being salaried is not enough. Review all of your policies. Even the possibility of improper salary docking can be enough to destroy the exemption. And what that means is this: even if you don't actually deduct from someone's salary, if you have a policy that says you can make a deduction that's not on that list of 7 that I just gave you from the salary of an exempt employee, that can be enough to destroy the exemption, the mere possibility, even if it never comes to fruition. And then we want to audit all of our positions to determine, hey, have we been making any impermissible deductions? If so, do we need to make safe harbor payments so we can get back in good shape on our safe harbor? All right. Questions before we come to our last topic here, which is exempt employees themselves and the meaning of the various exemptions and how to establish whether an employee is exempt. Larissa?
No, not yet. Go ahead.
All right. Fantastic. Okay. So this is, again, our last topic, but it's a very important one. We're not going to go through some of the less often used or peripheral exemptions. I'm happy to talk about any of those if anybody has questions after the presentation. But basically what we're going to talk about are the white-collar exemptions, which are the most commonly used exemptions under the Fair Labor Standards Act. And basically what that means is if you meet this exemption, then you're exempt from payment of time and a half for hours worked in excess of 40. And as long as you're paid on a salary basis, then that's all you're owed. So the exemptions, the common ones are the executive exemption, the administrative exemption, the professional exemption, outside sales exemption, and the computer exemption. And we're going to talk about each of those in some detail. Before we get into them in great detail, basically the executive exemption is someone who is supervising at least 2 or more full-time employees. An administrative employee is someone who's performing non-manual administrative tasks related to the general operation of the company, as opposed to a production type task that you're being paid for. And they exercise truly independent discretion or judgment. Professional employer usually is someone who has higher education and their job requires that. Outside sales requires at least 50% of the time be outside of the office selling, and the computer requires analysis, program, or design, and does not apply to help desk type employees. So there's a new rule effective January 1, 2020 on the minimum salary level. So basically, in order for an employee to be exempt, you have to meet three things. You have to pay them on a salary basis. You have to pay them a salary of at least, as we see on this page, $684 a week, or as that extrapolates out over the course of the weeks, months, and years. And they have to meet the duties test for one of these white-collar exemptions that we just talked about, or one of the other exemptions that are more arcane. So they've got to meet all three of those things: salary basis, minimum salary, and the duties test. So for the duties test is whether or not the primary duty of this employee's job falls under one of these exempt categories. There used to be some vagueness as to whether the employee had to perform at least 50% of their time on that duty. That is no longer the case. The primary duty simply means it is the most important duty that they perform, and it's integral to their job. So in other words, someone who is falls under the executive exemption because they manage a sub-department, they may spend 60% of their time doing things that don't directly relate to evaluating employees, directing employees, setting job assignments, hiring, firing, disciplining. But as long as that's the key aspect and the key element of their job, then they can still qualify for the exemption as long as they meet the salary and salary amount test. All right, so let's talk about each exemption. The executive exemption requires that the primary duty of the employee be management of either the entire enterprise, a customarily recognized department or subdivision of the enterprise. And that can mean a small subdivision, but they have to manage some subdivision of your enterprise, and they have to customarily and regularly direct the work of at least two other employees besides themselves. And as relates to those employees that they manage, they have to have either authority to hire or fire those employees, or their suggestions and recommendations as to hiring, firing, advancement, promotion, or other change of status of those other employees have to be given significant weight. Basically, they're going to be relied upon absent some good reason not to. So managing, what constitutes managing? Interviewing, hiring, training employees, setting or adjusting their rates of pay, supervising their work, conducting evaluations, handling disciplinary and grievance issues, and making decisions regarding the type and quantity of physical material to be used in production. So some combination of things on this list has to be the primary important duty of an employee's job for them to be eligible for the executive exemption, in addition to them managing those two employees and having that authority over them that we discussed. Okay, the administrative exemption. This is an employee whose primary duty is the performance of office or non-manual work that is directly related to the management or general business operations of the employer or the employer's customers. So it can't be someone who's managing customers or bringing in revenue. It has to be more related to the general business operations. And their primary duty, again, primary duty, same definition, has to include the exercise of discretion and independent judgment with respect to matters of significance. So if they've got sort of a laundry list of a decision-making tree as to how they do their job, that's not independent discretion and judgment. They have to truly have the ability to make decisions on their own in order to be eligible for this exemption. So discretion and independent judgment means comparison and evaluation of possible courses of conduct and making a decision. Matters of significance refers to the level of importance or consequence of the work that they have that discretion on. And decisions or recommendations may be reviewed at a higher level and occasionally revised or reversed, but they can't always be subject to sort of constant approval of a level above. They have to have that discretion. You can have a manual used, but not if it's the kind of manual that literally directs them every moment of their day as to how to do every part of their job. The next exemption, the learned professional exemption, this is going to be your doctors and your lawyers and your engineers. The primary duty has to be the performance of work requiring advanced knowledge, and typically that's going to be at least, if not more than, a bachelor's degree, usually some kind of degree beyond that. It has to be in a field of science or learning and customarily acquired by a prolonged course of specialized intellectual instruction. The computer professional, this is the one of the white-collar exemptions that does not require that the employee be paid on a salary basis. So they have to either meet the $684 per week or be paid at an hourly rate of not less than $27.63 per hour. And this is your computer analyst, computer programmer, software engineer, or other similarly skilled worker that performs as their primary duty systems analysis, system or program design, programming, or a combination of these. It is not your help desk employee. And finally, your outside sales exemption. Here, the primary duty has to be making sales or obtaining orders and contracts, and the predominant activity has to occur away from the place of business. So there is a final sort of hybrid exemption for what's called the highly compensated employee exemption. They have to make at least $107,432 a year. And they have to perform office or non-manual work. Here they have to perform one or more of the exempt duties. So this employee might not meet all of the requirements for the executive or the administrative exemption, for example, but they have one or more of those duties and they're paid in excess of $107,432 annually and at least $684 a week. All right, so our solution here for this category is to do an audit, basically. We want to be doing a self-audit of all of our exemptions to make sure that people that we are treating as exempt are truly exempt, because misclassification has a whole host of problems. You're going to end up with a class action for unpaid overtime and various other issues. So gather your documents, your organizational chart, your job description. And let's talk about job descriptions, right? We want to make sure two things. First of all, the reality of the job has to meet the duties test for an exemption, but your job description can undermine you if it doesn't reflect that. On the other hand, your job description alone can say what it says, but if the true job does not reflect exempt duties, then you're still not going to make it. So both of them, you want to be supportive. You want to make sure, and I will tell you, it happens all the time, that job duties sort of morph over time. So you want to be conducting regular audits to make sure, and by talking to managers, maybe employees, but at least managers, to make sure that the real duties of this job do continue to support an exemption if the employee is being treated as exempt, and to update that job description to be consistent with the way the job is currently performed so that it's helpful and not the opposite if an issue comes up. And of course, make sure that the employees are continuing to be paid on a salary basis at the new minimum level and that no improper deductions are being made. But you'll see this last one is in bold and all caps. You do not want to do this audit without there being a legal privilege associated with it. So you want either an internal or external counsel, even if they're not the ones doing the actual legwork, to be the one that's sending out the initial email directing this audit and requesting that you gather this information for legal analysis, because otherwise what you're probably doing is creating a bunch of good evidence for someone who sues you about all the ways in which you have been violating their exemptions. So fixing an improper exemption. This is a very, very difficult thing to do and a problem that comes up all the time to which there is no good answer. The three examples you see on this page are very distasteful. So you've just discovered that you've been paying this whole category of employees as exempt and not paying them overtime, even though they work 60 hours a week or whatever it is, and you've just realized that they probably aren't actually exempt. So your options are call the Department of Labor and say, oops, let's fix this. Tell them to file a lawsuit so that you can oversee a class conversion. Those two are mostly jokes. I don't think you want to do either of those. The only real viable option on this sheet is to convert the employee, pay any back pay, and obtain a signed receipt of payment for them. So what you're usually going to do is say, okay, we've misclassified this employee. We need to go back and calculate how much we have underpaid them as a result of their misclassification over the last 2 years. and then we're going to pay them, issue them a check for that amount, and then get a sort of what I'll call a hybrid release document, because you cannot release claims for back wages without court involvement. But you're going to have a release, and you're going to have an affirmative representation that what you've paid them accurately represents pay for all of the work that they performed as applicable at time and a half. And then, you know, you're going to make sure moving forward that we are correctly classifying these employees. The fourth option that does not appear on this page, which is what a lot of employers do, is what I'll call the hold your breath option. And that is convert the employee going forward, try to come up with some pretext for why we're changing them, such as, well, we're changing you from salaried to hourly, and so you're no longer exempt, or we're restructuring your job description. The problem with that approach is that it works great if you're holding your breath works, and for the next 2 years, none of your employees who were improperly classified bring a claim against you. But if they do, and if even one of them goes to a lawyer and that lawyer figures out that they've got a misclassification issue here, which, by the way, the very act of reclassifying them often gets people thinking about why you have changed, then you're now on the hook not just for 2 years of missed pay at time or time and a half. Under the law, they now get double that, and it goes back for 3 years because it's now a willful violation. So you've basically just tripled your exposure there. And if a lawsuit has to be brought, then attorney's fees are involved as well, and it's almost always brought as a class action claim, and those attorney's fees can easily reach into the millions of dollars. So not a great thing, but the best thing that you can do is make sure that you've got your exemption ducks in a row and fix problems sooner rather than later if you find that you have them. So I've got a list here on the last slide of a number of compliance assistance materials that you can get from the Department of Labor website, such as the law itself, the regulations. Their DOL issues interpretive guidance, such as opinion letters, field operations handbook, and field bulletins. You can get your posters online there as well. So there are a number of good resources that you can just get online. So that is the end, and we have hit the end of our time as well. Any questions before we close?
There's nothing in the chat yet, but we will give it another minute.
We'll give it just a minute, but in the meantime, thank you guys very much for your time and attention. I really appreciate it. And I also, you can reach me through MGMA. If anybody does have any follow-up questions or more specific things they want to dig into, I'll give you my email address now. It's Gregg, which is 2 G's, Gregg, .Lemley, Lemley, at Ogletree.com, and that's just Ogletree. But also feel free to reach out through MGMA or Chris, and they know how to reach me as well if you have any follow-up questions.
And we've had a few excellent presentations. Thank you, Gregg. This was great.
Excellent.
And wait, there's something in the Q&A. Great presentation. I thought this would be far less entertaining.
Well, good. I'm glad to hear it. It's not the easiest topic to make interesting, particularly in the Zoom setting, but thank you very much. Thank you guys very much. I really appreciate you having me.
Well, thank you again, Gregg, for taking the time out of your schedule. I'm sure everyone has lots more questions or anything going on in there from the information you shared. And to close out, I wanted to just say that we've had really great engagement with this webinar, and you can expect an email coming from the MGMA asking for any other topics or things that you would be interested in learning about or things that you would find helpful. So look for that email, because we are going to be doing webinars for the next few months while we wait for everything to hopefully settle down sooner rather than later. So you can expect that, and we would really love your feedback so that we can continue to deliver really great content for you all. But thank you all for joining, and have a great rest of your day.